Hey everybody, it's Jimney Credit, my trusty sidekick Chumley. He's been looking at the restoration hardware, or what they now call RH catalogs, for a little while now, and he was just saying, God, all this stuff looks the same. I wonder if it's selling. He was on the conference call with me the other day, and I don't think it's selling very well at all. In fact, they're selling so much stuff through the outlets that margins have compressed to almost nothing. So what's interesting about Wall Street is that we don't just have people who are professionals at finding things before they go up. Some people actually specialize in figuring out what's going to go down. You know the expression, don't sell yourself short? As a 5'2" guy, I understand it all too well. It comes from Wall Street. When you think that something's going to go down, how do you capitalize on that? You have your brokerage firm borrow it, you sell it in the open market, you hold on to the proceeds, but you have to legally at some point buy it back. Hopefully you do that at a much, much lower price than you sold it. So you buy low, you sell high, but it's in reverse time order. I specialize in that. I'm particularly good at finding things in balance sheets, cash flow statements, and operating statements that say, wah, wah, there are problems here. Restoration hardware, it's riddled with problems. Come on, we'll have a good time. We'll tear this thing apart and you'll say, wow, that's an interesting take on that company. I wonder why the stock is so high. Maybe, or you'll go, that midget's wrong. Don't listen to him. Chumley here is going to take a nap, and I'm going to tell you about what happened to Restoration Hardware. Have you gotten these catalogs before? This is just the sub-catalog. This is RH Outdoor, and Chumley just finished reading RH Modern. But there are others. They're about 9 inches thick and about 10 pounds worth of catalog that come in the mail. Have you gotten them? It's pretty disgusting. It's a complete waste of paper, especially if the company's not making any money. But that doesn't stop the company from buying its own stock back. In fact, Gary Friedman was given a $300 million budget to buy his own stock back a couple of weeks ago, and instead of taking about a year to do it, he did it in a matter of weeks. And then the board, toothless and stupid, decided to give him another $700 million that he doesn't really have to go out and buy more of it. Let's talk about what Restoration Hardware has done over time, and Chumley here is going to take a nap. The company does its best never even to mention the word EBITDA on the conference call. Securities issuing companies that have any form of debt, even not public debt but just leases, they publish what's called contractual obligations. It's a table in the 10K. The 10K is like the annual report for analysts. No glossy pictures, just a lot of boring words and numbers, but I love it. Restoration Hardware had $1.5 billion in contractual obligations. When I first found this situation, let's call it, in July 2015. By the end of fiscal year 2015, December, early January, they had $2.2 billion in contractual obligations. Leases alone had gone up $365 million and have just been expanding ever since. They keep opening more and more stores, more outlets. It would seem that Gary and Karen don't really want to put the word sale in those fancy new buildings that are being supported or funded by build-to-suit lease accounting. So instead, they're building outlets all over the place. And they're full of product. I've taken some pictures. Maybe I'll share some of those. When you build those massive buildings, you'd think that maybe you would have a sale area where the older merchandise or returns might go. They don't want any of that. Looks too trashy, I guess. Instead, they'd rather mark it down 70% and put it in some warehouse in Long Island or down in Orange County, California. In late 2015, the stock was flying. Until it wasn't. When the Restoration Hardware CEO Gary Friedman hangs a massive, and I mean 10 by 17 foot poster of himself in the West Hollywood store, is he really selling furniture or is he selling himself? Gary! He's not selling furniture, he's selling himself. Contractual obligations went from $1.5 billion up to 2.2. Selling square footage went up roughly 19%, but sales only increased by 3.5%, very much trailing the infrastructure and cost expansion that this management team was putting the company through. Who discussed it? Not the big wirehouses that were busy writing buy recommendations. The board of directors of Restoration Hardware, or now RH, is clearly asleep at the wheel. What's insane is that the board allowed Gary Friedman and Karen, essentially, to go buy something called Waterworks. That's a really fancy plumbing fixtures company for rich people. I'm not saying it's a horrible store. It's a very pretty store. They've got some great stuff. But Restoration Hardware already had a boatload of different plumbing fixtures. They paid $119 million in total consideration for this deal. They got $16 million worth of hard assets and more than $100 million worth of what we call Goodwill, which is when you pay more for something than your accountants say that it's worth, intangibles, and brand. Now, what's strangest about this, though, is that that $100 million worth of intangibles, brand, and Goodwill was split right down the middle. Goodwill is the excess that you pay for a company. Intangibles and brand is what an accountant can put together and say, well, you've got this many customers, they pay this much a year, and so the value of your brand is a certain number that an accountant can put on it. But in a deal, normally, brand, intangibles, and goodwill are two very different numbers. But here in this deal, it's almost exactly the same, which tells me, and hopefully others reading the same financial statements, that there's nothing really scientific about the pricing of these deals. When the Restoration Hardware CEO Gary Friedman hangs a massive, and I mean 10 by 17 foot poster of himself in the West Hollywood store, is he really selling furniture or is he selling himself? Within a matter of days of Restoration Hardware, or RH, buying Waterworks, two board members left the board of directors. One is Tommy Mottola, Mariah Carey's old husband. In the 70s and early 80s, he was a disco producer. Tommy Mottola was replaced by a guy who makes a snack called Pop Chips. Do you really think that the guy who makes pop chips is a better businessman than Tommy Mottola, who created a whole disco empire in the 70s? I doubt it. There are different kinds of bonds out there. One is called a high yield bond, and it has a regular annual coupon. Junk bonds are companies for really kind of scary or cyclical or risky companies. They have high interest rates. You know how a savings bond, you pay $600 for something and a few years later you get $1,000 back? That's how zeros work. Had the company actually gone up to the junk department, they would have paid a very, very hefty coupon because they had all this hidden debt in the contractual obligations tab in the 10K. Some big wirehouses that were busy writing $120 a share buy recommendations when the stock was on 104, those analysts didn't notice it. Why not? I don't know. Maybe they didn't want to see it. In order to really understand the financial statements for Restoration Hardware, you have to understand something called build-to-suit lease accounting. That's when you decide you're going to build or renovate a big building, and a developer is going to have to put in some of his own capital through the process. Whenever that happens, that developer's asset goes into what we call PP&E, property, plant, and equipment, temporarily until we do what's called a sale leaseback of the building from the company that's building it back to the developer who's going to be leasing it to you later on. For Restoration Hardware, that number was, I might be off here by a bit, but about $120 million a couple quarters ago. Much closer to like $795 million? You had brokerage firms out there writing buy recommendations, not understanding build-to-suit lease accounting, and saying, you know what? You people should be buying this. Jim Cramer from CNBC, when the stock went from 104 down to 92, he had Gary Friedman on in the Bay Area, and he essentially did what we call pounded the table and said, great company, great stock, buy it! Why the NASD lets these companies get away with what we call financial news entertainment, rather than screening who they're talking to and saying, if I don't know who's listening and I don't know their financial condition, I don't know how many risks they can take, I'm not so sure I should be recommending these things. Instead, they get away with a legal clause that lets them honk horns and act all silly and tell people to make stupid mistakes and buy stocks before they go to 26.